Going on, everybody in the chat? Happy to see you all here with me on this afternoon here in the States. Thanks for joining wherever you are in the world. Got a pretty special stream planned for today, talking about the markets with the one and only Charlie from Cultivate Crypto. Some of you might have seen Charlie and I get together on the Hex Online Conference Day 4 for an hour-long panel. We were joined by Hex Monkey and why is his name escaping me right now? Westcott, the hype man himself. And it was a pretty cool and it was a pretty good introduction to that was our first ever meeting, feeling each other out. I'd on occasion here, since things have been ramping up in the markets and the last like 3 or 4 months, Charlie and DCC have been way more active on the streaming front, so I've been able to catch some of their content, and I just noticed that they were on the ball, and you hear it around the space too about their success with their crypto mindset course as well. So we'll be definitely talking a bit about that as the stream rolls on. But some announcements here before we get started. I got a stream today, of course. They got 2 more this week. I've got one tomorrow with the first ever liquid staking derivatives platform for Pulse Chain. It's called Project Pi, and I'll be going live with Chris and Van. They're really two really smart guys. One's a physicist and one's a coder, and they're basically bringing one of the most valuable things from the Ethereum chain and bringing it to Pulse Chain and liquid staking derivatives. So I'm excited to do that stream tomorrow. And then on, I believe it's next Sunday and going into next week, I got a couple more streams lined up as well. So if you want to know more about that, go check out axisalive.com/events. And that all that content will be there, as well as you can find more information and just simple market analysis given for free over Twitter at or X, x.com/axisalive as well. Huge shout out to the Pulse Domain guys. They launched Pulse Domains in the last couple of days, and that's proven to be a pretty successful launch. So, huge shout out to them. axisalive.com membership program. We just launched a referral program, so make sure you get to take advantage of that. And just happy to be here. So we're going to cover a bunch of stuff. I'm going to bring up Charlie. Thanks for joining me, my brother. Good to see you.
There we are. Yeah. How you doing, man? It was great to see you at the Hex conference. I know it was a virtual event, so, we didn't get to technically meet each other in person, but it was great to see kind of like, I've seen your content before a little bit, and I've seen what you've been doing, and I think likewise. And sometimes, before you start talking to somebody, you're like, okay, maybe I get this, what this guy's doing, but I'm not 100% sure. And then I was like very pleasantly surprised. Like, I was just like, damn, like we agree on a lot of shit. And,
oh yeah, dude.
But like
100%, that became very clear after just 10 minutes on that conference call. I was like, yeah, this is probably a good direction to go. So
yeah, exactly.
So I guess we might as well announce now, since I didn't do it in the pre-announcement announcements, but the Axicans, we're all going to be going to Vegas to see you guys live in person. You guys will be doing it's like a 3-day event, right? And on Friday, I believe the 8th, there's a day of presentations made available for attendees, and then there's a VIP dinner that night. So I'm very much looking forward to doing that. And I always tell people that we're in the beginning of the bull market, and I know it's hard to part with very precious cash in these times because deployment is the number one thing that you got your mind on, and that's true of most people. But if you can, if you do have like a day job and you can afford to make your way out to these networking events, it is honestly the difference between being like a squid level position player in the space and potentially a dolphin or shark level or even a whale. Like, you're going to go to these networking events and you're going to sit amongst the whales, and there's no better way to get involved than in face to face.
Yeah, you learn so much more by meeting the community face to face. You see, like, okay, here's some of the people that are actually not only buying and selling the price, but then also adding value to the community and various things like that. So when I was back in corporate, I was a corporate recruiter helping people to change their jobs. And the one thing that in that job is the most valuable is networking. So, the people that the people that you have connects with, the people that you actually have relationships with, you'd be surprised, how much you can actually, do with that. So yeah, I highly recommend people, if they've never been to a crypto meetup, you got to go at least, to one. And then once you do go to them, you'll be pleasantly surprised, kind of like on the turnout. I think my very, first few crypto events were in Tokyo back in the day. Roger Ver was still hosting Bitcoin meetups in Tokyo until he came up with Bitcoin Cash in like November of 2017. And so, I got the chance to meet CZ and Vitalik, face to face in those. And that was just like wild, bro. Like,
No kidding. Wow.
Yeah.
Yeah. I mean, my first, my first event was in March of 2018. So like the bear market had really been in full swing by that point. Crypto moves fast, you guys.
Well, yeah, and if you're going to like in the bear market, right? Like during those times, like a lot of the events were dead, but like you meet like some of the coolest people because at those times, because it's like the real true, not only believers,
100%.
but people who understand.
100%. It was funny because I went to this. It wasn't ETH Denver, but I think it ended up morphing into ETH Denver over the years. But this was actually put on by Salt. You remember that one? Salt was like a lending platform.
Yep, that was a scam and a half.
Yeah, and but the turnout was good, and the people there were real crypto people. So the good takeaway from it was just being surrounded by folks that had been in crypto now already for 5 or 6 years. That was my first splash into the foray of being basically a pretty green. I had been mining cryptocurrency for almost a year at that point, Bitcoin and Ethereum. And so my market knowledge wasn't to the level, anywhere near the level where it is today in terms of analysis. But at the time, I had so much more interest in passive income through mining. And but I remember sitting down with this guy, and I remember his name to this day. And it was interesting. So he was talking about how Mt. Gox was dumping their Bitcoins to pay back their creditors at that time. So the initial big dumps of Bitcoin Cash and some early Bitcoin came during the beginning of that bear market. If you remember, from like 20,000 down to 10,000, the trustee was dumping Bitcoins, or that was the rumor at the time. So it was causing this like cascading effect in the Bitcoin price. And I didn't really understand at that time. I remember now looking back with the context of what the guy was talking about, but I just don't remember thinking clearly like, oh, I didn't really know what he meant by that.
Right.
So you go to these events and you might not have to be the most expert or advanced player, but you're going to be able to pick up little nuggets from very intelligent, networked people that then you'll be able to look back and say, wow, that really added to my growth in the crypto space, because this is a really long game, and it takes a lot of dedication to get to that different levels. But one of the ways you could do that is by like signing up for your guys' course, right?
Yeah, you can sign up for the course. You can join the Pulse Chain Tour, like anywhere that you can go into, some Telegram groups, whatever you need to do. Like most people, they don't know a lot of, like-minded people in crypto. And so like all their, buddies and their network is online only. And the coolest thing that I noticed, because I was living in Japan for about 10 years. And so my first 2 years doing my own YouTube and everything, I was just mostly networking online. But the cool thing is when you meet people in person, 90% of the time, people are the same online as they are offline, right? Like you're like, oh, I already know these people because I've interacted with them many times and talked with them. And especially in crypto, I don't know, maybe it's just because we're in the same industry and like, we already have a like-minded way of thinking. But back in May here in Miami, I went to the Bitcoin conference here for the first time, and like everybody was fucking cool, man. Like it was just a great time. All the hexagons, pulsicans were fun as hell. All the Bitcoiners were actually talking about shit coins, and everybody was just having a good time and being thinking the same way. So I don't know. There's just something about like meeting people in person that is really important. So yeah,
100% can back you up on that. Like there's this phenomenon that happens, and this is something that, so I came from like the pro gaming scene back in like the late 2000s into the 20 teens. and like the experience of knowing people online that you're going to battle with every day online competing at a high level,
Mhm.
and then meeting them in person, like there's no differential there. You can't, it's almost impossible to mistake someone's character, because like you said, when you are interacting with these people, you know, daily in some cases for weeks or months on end, you do start to build this like very real and tangible connection with these people. And it really puts you in a position to be stronger, because
Mhm.
in terms of like crypto in a market analysis, like you're never going to have a 360-degree view fully covering every single angle of what's being built, what's new opportunity on the market. And so if you can just kind of like refine your edge and hone your blade in, and take very valuable folks and use them as signal, that can start to compound and put you in a league, your little group in a league of your own. And that's kind of where some of these like groups comes into play, or you know, in a broader context, like the hexagons as a whole, we're all aligned in our mission, right? To bring more of a fair and free money system to the world. That's not arbitrary rules based on some central organization, but more focused on the code, the immutable code that like binds us all together and keeps our incentives aligned. And
Mhm.
so it's an exciting adventure to be a part of, because like you're actually seeing the real results of it, which is wealth and abundance happening to regular people that this opportunity would otherwise never be a possibility.
Yeah, well, like you said, you don't have to be, I think a lot of people in crypto, because we're all trying to, kind of figure out this Rubik's cube, and we all have like different angles that we take, and everybody's smart in a different way. There's a lot of people that they do kind of like compete on intelligence with it, which I think is really dumb. Because you don't have to be the smartest person in the room. You just have to be good at what you do if you want to, provide value. But even if you're just a fly on the wall in some of these events, like you said, you can pick up a nugget here, you can learn about that there. And the craziest thing for me, when I did go to that very first Bitcoin meetup in I think it was July of 2017, uh, we were listening to Vitalik Buterin speak in front of about maybe somewhere between like 80 to 150 people in the basement bar, like just this dingy ass place. He was talking. He had a
Modest beginnings.
yeah, exactly. And he had, and this is, they a lot of these guys, that was their last vestige of organic growth, and then from there they just became billionaires,
Yeah.
and like,
Just
uh,
accidentally became a billionaire overnight.
yeah, like I didn't even know who CZ was when I first met him. He was just like, nobody was talking to him. He was standing next to this thing, just having a drink. And I was like, oh, you're the OKX guy, right? And he was like, I used to be.
Oh wow.
But I think he got offended by that back in the day. But then, like a few months later, he was on the front of Forbes magazine. I was like, what the fuck? But like, he was just a really cool guy. And he was very personable. But um, no, when I was listening to Vitalik speak, I didn't understand nothing. Like he was like talking like a fucking alien to me, man. I was just like, what is this guy talking about? But I was taking notes and trying to remember some of this stuff. And like you said, just grab what you can, and that can change the trajectory of your whole crypto journey, or at least add to the layers of it. So
It's definitely going to be value add 100%. I totally agree with you. You know, we have people in the axisALiVE boardroom group that are just like all the way from beginner level, just starting to get familiar with using the Pulse Chain Bridge and MetaMask and stuff, to and the nuances of those tools, to expert level liquidity providers and market maker whales. Like we have the whole gamut of types of people in there. And so it's kind of cool. One of the things I started doing was asking people, where do you think you fall at on the skill levels? If these are the tiers, where do you think you fall? And
mm,
it's funny because if you're a beginner and you're honest with yourself, you always sell that. You always tell people you're a noob. But if you're on a like a if you most people, they actually think they're higher than they actually are. So like,
right.
if I was to go and designate who I thought was who, I know that I'd be offending half my group, because let's be honest, how many of us have mastered every single angle of crypto, from base level dev work, building a blockchain, all the way up through market mastery? Like not very many people are like Chad level crypto folks. And you don't have to be.
Well,
But
and
if you
yeah,
listen to those types of people, you can just pick up little bits of information, and even if it doesn't all make sense today, it will make sense tomorrow.
right. Well, and I think a lot of those guys, like the one thing, they may be, you know, way smarter in certain aspects of crypto, but that's the cool thing about crypto. It covers so many spheres. It's virtually impossible for anybody to be truly like a total expert in the whole space. Like obviously, Vitalik or Richard or anybody who has created a project and run that through probably has the most well-rounded experience. But generally speaking, yeah, it's so hard to like that's the cool. That's why I love crypto. There's always something new to learn.
Yeah, man. Love it. So I guess maybe this is the area where, so guys, come meet us in Vegas if you can make it. I think the bookings end on the 4th. Use code AXIS to get 10% off.
Hell yeah.
And so maybe we want to take a little opportunity here to like dig into some of our thoughts on where the market's at today. Maybe we could just talk broadly and then narrow in on going on an asset by asset basis and
Yeah.
share some charts and maybe we got Hexagon Hill in the back here helping me out. And if he could just take chart requests for the end of the stream. But in the meantime, yeah, what are your thoughts on the market, where it's at, where it's headed in the next like 3 to 6 months?
Yeah, I mean, the if I were to like simplify it really, really easily, I would say your best buy periods basically are end of February to end of March, and then probably going into May. Like we have, um, we've been kind of the last 2 years, right? Accumulating. We've been in this buy phase. We've been in, getting lows and we're going from bear to bull and all this stuff. And so now we have to start being like, oh shit, we don't have that much more time to buy good prices.
Mm-hmm.
So, okay, these next two buy periods, we have to really take advantage of that. And we have to, make sure that we got our bags packed. One of the things I've been saying is, quarter one, you better have your bags packed and you better understand, what your portfolio is doing, why you're in certain things, all this stuff. Because by the time we get to Q2 in April, May, the halving's going to be here. And yeah, we might get another high or low. Of course, we can talk about the possibilities, but in terms, I always go with like, okay, if this, then that strategy. So there's a lot of possibilities, but which one is my main thesis and where do I think things are mainly going? And I think even though, we have interest rate cuts maybe going into at post halving and we maybe get a dump from that, I still think, that dump is probably higher lows because we've had what in the last 3 weeks, like billions and billions dollars sold.
I knew exactly where you were going with that. As soon as you said
Yep.
we've had, and I knew you were going to talk about how
Yep.
much Bitcoin's been dumped, and yet Bitcoin's rallying.
And
It's amazing. It surprised me actually. I know we were both looking for that like 35 to 38K level, and it never came yet. Like,
Well,
what the hell?
and so if this then that, if we're gonna get it, it will happen in the end of February, March. If it does, if it doesn't happen, holy shit, we are so bullish.
Yeah, beware the Ides of March. And, honestly, I want to see that dump. So if you guys are leverage trading, maybe be careful. But if you're just spot buying, you just keep waiting for better prices. Take them as they come, and they might not come down as far as we think. It's definitely scary bullish out there right now on Bitcoin, and Ethereum is even holding up pretty decently well during this action as well. So. Yeah, I'm excited by that idea, but also kind of nervous. I don't want to see a situation where we get this left translated cycle and a blow off top or a marginally higher high on Bitcoin and it's over for the next like few years.
It'd be so, yeah.
What a buzzkill.
Exactly. Just like the party should have been better. And that's what I felt about the last cycle, to be honest. Getting up above, $55,000 Bitcoin was where Bitcoin itself hit $1 trillion market cap. And I was like, cool. But we were expecting 100K in the last cycle, and it was very possible. I do think that double top there that we got was in large part because Wall Street and the Bitcoin whales were like, okay, we're gonna take time to take profits. And so my most bearish price for this bull market is 81K, and my most bullish price is 180K. Personally, I can see arguments for up to maybe like 220, 250 max. But we might get something similar again. I have some Elliott wave patterns that I'm looking at and stuff like this, and those are of course speculative in terms of your future projections, but in terms of what we've seen so far, it seems like we might get this whipsaw action, which would be fucking crazy if we get up to like 120K, let's say Q1 of next year for Bitcoin, and then we dump back below 100K, and then we pump again to like 150K. That would be the most wild, scenario that I can imagine for the bull market, and that will not only give BlackRock and different whales more time to buy. Going to $1 million, baby. Samson Mao, let's go.
Yeah, so definitely not. But I'm looking at this like, right, Samson.
Well, yeah, he's
secretly an
talking
ETH
about
lover.
$1 million Bitcoin like it's going to happen this cycle.
Just look how on track we are for that 2015 fractal, though. Like it's almost like pound for pound. This section here, exact, and then you had some divergence here, and then you had it, but you had divergence back the other way. It's almost like perfectly interweaving. And then I mean, more or less, this is what you got is like this interweaving pattern, like a DNA strand. And now we're just on track to potentially go a little higher here, and then maybe roll back over on your Black Swan type thing scenario or that Ides of March scenario where we come back to test 38K potentially, something in that zone.
Well, I think we test at least 38.
I think it would almost be a require. Like maybe it's a week, maybe it's within like you're saying 3 to 6 weeks away, where we just chop, and then bam, smack down, and then we build up a base from there, right? And then start going from there. But generally, like this, isn't it so uncanny how this trend is just holding, just like the 2015 cycle?
Yeah, I would say 4-year cycles tend to do pretty well going into the halving, right? Going from the 4-year cycle low to the halving. If you look at 2019 specifically, we went up to, like, if you take the fib retracement from the top of 2017 to the bottom of 2018 there. Oh no, not that one. One.
Oh, I got you. This one.
No. Go back to the top of 17 at
20,000. Oh, I got you.
Yeah, there we go. From the top of there to the bottom of the bear market, right there. Boom. We came up and we hit the 0.618, but we did it so fast. We did it within 6 months. That was the main difference between 2023 and 2019. Being 4 years apart. But in 2023, if you do take the fib from 69 down to 15. We did hit that 0.618 here at that 48K level. We hit it right on the nose. And then basically pulling back, so we basically in 2023, we took a year to hit the same level that it took 6 months in that last cycle. And then, the cycle before that, the one you're comparing here, the things are the price
385 days from the lows to the 618, and then this one was 182, half the time.
Exactly. And so, like, what does that tell you? To me, what that tells me is all these rhyme, and they're very similar. The fractals are similar, everything is similar, the fib retracements, everything, but sometimes the dance and song happens slightly differently, like in terms of time. So it is kind of crazy how like all these things line up, but at the same time, it's like, oh, it makes sense when you understand the fundamentals of the halving and liquidity cycles and stuff like that.
Yeah, my thoughts on this whole spiel is it's something that I kind of borrowed from Steve from Crypto Crew U, which is like the building of the market structure. And I mean, it makes sense just from fundamentally from the angle that this market was straight up, straight down, straight up, over. It was done. Like there was no time for structure to be built, and you stair-stepped your way higher, and there was time for institutions to buy into their positions and time for traders to trade in each zone before amping it up and for building a proper parabola. Like 2015, you get that like structured move where it's like a cadence. It's very predictable. You get the base, and then you get the phase one of the bull, which is kind of more like in this zone. And then you get the phase two, and you build up. And each one of these phases retest the top of that previous structure. And then as the market cycle continues, you get the time between each leg up is shorter and shorter and shorter as it goes parabolic, and more money flows enters the space, right?
Yep.
And so what I'd like to see, this cycle is more of like a a proper, institutional wave, and then it moves into the next wave, moves into the
Mm,
next wave, moves into the next wave type of situation. And so this kind of gives us a decent sequence here, of something you might be able to expect going forward. I would love to see a retest of 32 to 35K. Now, I don't know
mm.
if we're going to get that or not. It doesn't seem like it wants to at the moment, but March isn't here yet either. So,
Yeah.
in
A
any
lot of
in any of these would be a buying opportunity. You would agree?
Oh, 100%. So, hey, we're at the shooting fish in a barrel part of the market,
100%.
which is great. Which is, like, doesn't mean you can buy anything. I don't think you can buy anything and win in this market, but you can buy, if you have, you know, a basic thesis for, okay, this is why I like this token and this is why I think it's going to do well, then you can buy a lot of things with confidence. And like that going into the halving in like 1 to 2 months past the halving, traditionally with crypto, that's all you get in terms of like really, really good buy opportunities. And then everything after that, you're buying higher, you're buying higher, you're buying higher. And my experience with, dollar cost averaging into an asset as it goes higher, I've had one really bad experience with that in particular that I learned a lot from, which was Verge back at the end of 2017.
That was XVG, right?
Exactly. And
Sorry if I bring up some PTSD
no, I
here.
love it. Oh no, I've dealt through it. It's all good.
Which is this? This isn't the full chart. Let's see. XVG. Which exchange would have the most data?
um,
Binance,
yeah,
maybe
Binance was just
later.
coming up at the time, so an old exchange, maybe like a Bittrex or maybe Bitfinex. Bitfinex is old enough; it might be in there.
Bitcoin pair, maybe. Yeah, it only goes to 18 April of 18, which is that's probably
Oh,
not something you traded into.
yeah. Sometimes CoinGecko has like a more generic chart, um, even though it's like a more bird's eye view. Um, but yeah, I was watching, like, I felt like this is my first cycle in 2017. So I got into Ethereum in May, and then I was watching, yeah, if you put it on max there, like I was watching XVG from September of 2017. Uh, there you go.
Oh
And
wow,
it was a privacy coin. And so in September of 2017, where is that on the chart?
right here.
Okay, there we go. Yeah. And so like I was like, oh, price is cheap. It's a like Monero and these other coins, it's a privacy coin. So that'll be a narrative, that's a category. And then it pumped up, but I was like, okay, I'll wait for it to come down a little bit. And then in early November of 2017, I was like, okay, price is still cheap. And there was a bit of a dip there. So I'm like, okay, I gotta buy it because that's the cheapest I've seen it, in the 3 months that I was paying attention to it. And at the time, I'd been only been in crypto for a few months. So 3 months to me was like a fucking lifetime. And I was like, okay,
Mm-hmm.
I know this thing backwards and forwards. Like if I buy this dip, it'll be good. I bought
100%.
it. 2 weeks later, John McAfee was like, XVG, and this shit just fucking. I put like $500 in that thing. It turned into like $10,000 to $15,000,
Amazing.
and
The
I
power of
was like,
cryptocurrency, man. It always never ceases to amaze me.
right? I was just like, holy shit. And so I didn't know where we were at in the cycle. I didn't know all that stuff. And so stupid ass me, what I did was I was like, okay, well, if I take $5,000
Oh no.
and I bought, so I had bought it at 30% of a penny or something like that. And then it went to 30 cents. And then on the pullback to like 15 cents, I bought 5,000 more dollars of it because I'm like, okay, I gotta get more of this shit because I think it was like 100,000 coins or something like that. I wanted like a specific number,
Oh, dude, this is the
and
perfect lesson to teach people right now about
it is,
unit bias.
yeah,
About the unit bias from the angle of having a number of coins you want in your mind, irregardless of market action, can get you in a pickle.
it'll fuck you up. And so like there's some people who are like, hey, like is this amount of pulse chain good? Can I have this amount of
I
pulse
know,
X?
right? And this is
And I'm
one
like,
of the lessons you guys got to know. You have to know it.
well, and it's a understanding the 4-year cycles, and it's understanding unit bias as well. But like with the 4-year cycles, it's like, okay, if I'm very disciplined and I follow the 4-year cycles, and I'm like, I'm not going to buy anything new except for brand new projects, maybe after June of this year, because we've been buying the last 2 years, a bunch of crypto, it's going to be really hard for a lot of people to do that. And then when they do make money, they're going to want to, dollar cost average in higher. And I would just really, warn people, be like, yeah, you could probably do that throughout the entirety of this year and still be okay. But I would definitely focus on loading up, more early in the year, just because you don't want to do that to yourself. Because, yeah, we don't know. Like maybe, like you said, we could have a left translated cycle and things move up a lot quicker, faster than we expect. Party's over sooner. We all make shit tons of gains, but then you have to take profit sooner. And so if you've been in that mindset of buying, shifting into profit taking can be really, really hard. And so yeah, I really tell people, be careful out there, because we're about to make that shift in mindset from being buyers to being, holders and sellers.
Yeah. Don't marry your bag by wanting a certain amount of units of a coin that you like. And the reason is because you'll get fixated on the PNL that you're looking for. So it's the DCC talks about this, like, oh, just 500 more thousand and I'll hit the million mark, or just 300 more thousand and I'll hit 10 million. I got to hit that 10 million mark, or I got to hit that certain number of dollars in their mind, their portfolio. And they just completely miss the top, or they completely miss the market trend swinging back the other way, because they're so fixated on this number. And the number doesn't matter. That the market gives no shits about your PNL. They don't. The market has no care for you and your PNL and the amount of units you're trying to acquire. It's more about being good at assessing the risk in the market and always having fresh capital to deploy, and deploying a sustainable amount of capital in throughout the market cycle lows, which, by the way, you've had over a year and a half to do this now.
Right.
Inside of here, total market cap. And so like now it's like, okay, it's now we've amped up the game. The game got a little bit harder. It's going to be easier to make money, but harder to get the best price. So now you're going to shorten this amount of time in half, and then you're going to get the next leg up. And then you'll get, so this is why Charlie's saying, you have maybe 6 to 12 months, maybe, to really be finishing your DCAs in. And then you just kind of have to ride out the wave after that. And don't be so fixated on those numbers. Yeah. Okay. So that's
like truly to get the best prices, you have 3 months, but yeah, like 6 to 12 months, you could still be buying, but you have to go for discounts, right? So like something like Solana, great, coin in terms of where it can price appreciate this cycle and everything. But it's ran compared to everything else. So do you want to be chasing that, or do you want to be buying something like, Pulse Chain right now, which, hasn't hit new all-time highs yet?
Yeah, loving that chart right now. Wow. Just for comparison's sake, like imagine, I'm just going to guess, this fractals do not always play out the same 2 cycles in a row. But even if let's say the most bullish case here was something like this. Actually, I probably have to put it on linear. Let's see, one sec. So like say we're in this first markup right here. Well, then you really only have this left and it's over for Solana. Yeah. I mean, it's just going to, what's your potential gain here? 200%. Really? I mean, let's say it even goes higher, $350, $400. Like you're looking at a 2.5, 3.5x. Once you go into price discovery, and because this market's so heavy, and the big move is already kind of played out here on this one, versus getting into something like with a lot more potential, like Pulse Chain, which is brand new and still at its, relatively low in its price, and it's much more illiquid, which means the upside potential is even higher, of course. Yep. I'm with you on that. So yeah, it's people generally in the crypto market, especially like the non-RH type thinkers. And I'm glad for you guys to be able to bring kind of an elevated mindset to the people in crypto, because it kind of breaks them out of their echo chamber of centralized cryptocurrencies. That the safe play, it's a safe amount it's safe to get a Solana at $100 and ride it up to $300, and I don't disagree with that. And if you want the liquidity and you want a guaranteed 2x or 3x, Bitcoin is valid, ETH is valid, Solana is valid, but you'd almost be wasting your time in crypto for those kinds of gains instead of taking even just 10% of that allocation and put it into something that's going to potentially do 10, 50, 100x returns, something like the Pulse Chain ecosystem.
Yeah, and you can't so like Solana is a layer one that had that amount of gains in its first cycle, right? But it's in its second cycle. So, if you look at Ethereum, you look at Binance, you look at these other coins, usually they do about a 2, 3, maybe max up to 4x off their previous all-time highs in their second cycle. Like if you go to Ethereum's, there you go. You get about a 250% increase there from peak to peak. And so if you look at that on something like Solana, a 250% increase from its last peak, which was what I think like $300.
253 here on this chart. So 250% only gets you to $900. So
right. So maybe you crack 1,000. Maybe it goes a little bit more crazy and does something like Ethereum, and it's and goes to like 1,400. But you pretty much go from like $800 to $1,500 is kind of your target there, which is a 10, 15x is never, you can never complain about it, right? That's a good gain. But the stuff that can happen with Pulse Chain, just the crazy amount of X's you can do there because it's in its first cycle and it's a new layer one and it's built by somebody who has a lot of credentials and community in crypto already. Most layer ones that are being built this cycle, I'm like, like they're too late to the game. But the ones that are built by people who know exactly what they're doing, I'm like, okay, this is kind of last chance to get in on the layer ones. And then by this time next cycle, like those are all solidified, right? The infrastructure of crypto is solidified. So a lot of the layer ones from their bottoms, they did, something like, 100 to 2000, 100 to 2000x. Yeah. At max, and most of them, I think average like 800x, something like that, from the top of the bottom in the first cycle. So, if we get that 500 to 1,000x on Pulse Chain, like, man, like I think there's some people who are just like, they know the narrative so well from the community that they're just like, oh yeah, they kind of like, they're either in two camps. They don't expect it at all, or they absolutely expect it. And if you're in the camp that like you expect it because you saw what happened with Hex, like, yeah, it's great, but if you take it for granted, you can fumble probably one of the best
opportunities for sure,
wealth making opportunities in your lifetime.
Yeah, because it's like you're already coming off the back of Hex, which did a 10,000x against all odds. And so for this, it's the same setup. If you talk to anybody that knows what's going on in the Pulse Chain space, it's the same setup as Hex had, coming off massive FUD. And but except now, Richard Hart is punching back 10 times as hard, and he's got the resources to do it. And let's just to the last comments I want to round out this part of the conversation on is looking for that final dip in the end of February in March, and kind of relaying back to both the stock market and a potential a drop in the Fed rates that could potentially signal that final capitulation on risk before the move goes up. And let me preface by saying the reason why when the Fed drops the cost of money is important is because smart money takes profit, dumps all their assets, stocks or crypto, then borrows money at a cheaper rate to buy back other assets on a discount. And they make money at the top and they make money coming back in at the bottom, and then it resets the cycle. And so I guess I'll bring up just a stock market index of indexes, which is the S&P 500, the NASDAQ, the Dow Jones, and the Russell 2000 here on this chart, all combined into one. And you can see how we've broken the old highs, retested that previous highest support, and now we've rocketed off with a hamish bullish hammer off that level, and it continues to go higher here on the weekly. And now what I'll do is I'll delete all the data out of here and then pull up Fed funds rates as you comment on your thoughts about how this might play out.
Yeah, I think the S&P here, it's kind of crazy that it's hitting the all-time highs already. I think a year ago, if you said that to people, they'd think you're freaking nuts. With all the recession risks and everything people were fearful about in 2023 because of what happened in 2022. But so for that reason, you probably get some people looking at this as, oh shit, okay, and this might be like a profit taking opportunity. You might get one, we already got that one retest, like you said, on the weekly there. You might get one more retest of the previous all-time high, and then it goes ham, I think. And like you said, It's probably, every time rate change, that tends to make a dip in the market. If we start cutting, that's bullish because we'll eventually start money printing again. But the first reaction off of that is usually a pullback. So yeah, if we go and retest those previous all-time highs one more time, I wouldn't be too surprised on the S&P. But yeah, again, that's kind of like, that is another signal of like, hey, last chance before we get 1 year of just up and to the right for most assets.
I'm with you on that, and I'll support that thesis by kind of like pointing out what I'm seeing here in this chart. So, the orange line is the cost to borrow money. This is the rate that the Federal Reserve sets. This is the Fed funds rate, and so you could see since last July it's been flat. They haven't adjusted it up or down, or maybe very marginally, if at all, inside that 6-month window. And the last time we had a period like this was here in 2019, where the Fed stopped raising rates. Now, there was a different point in the economic history, in the economic cycle. The market this is maybe playing out a bigger picture version of something that happened here. And this is kind of what you could see on something like that. But I'm more of the belief that I'll give evidence of why I think this time's different. But just to keep in mind that what we're looking for here is for the Fed to slowly taper rates. I don't expect such a sharp drop unless something breaks. But even in this event here where they did drop rates, this was a very small correction in here. These were tiny little corrections in here, and you're looking at it on a broader time scale. So, I mean, what that might look like for us in the next year is, just a smaller little correction or two little corrections, and then those are going to be your last chances to buy, because there's a very strong correlation between Bitcoin and like the NASDAQ, for example. So if they are going to get that pullback on the stock market, you will see the same thing mirrored in cryptocurrency. So
yeah, and like you said, it might be 2 to 6 weeks. Like I think a lot of people will be shocked by how fast the market is going to move this year compared to where it's been the last 2 years.
I'm with you. And so like here, when it broke that high, this is like basically what you could be looking for is some sort of like a peak end of February 14th, 19th, or 26th, and then a roll down to test that base one more time. It's funny how it just lines up mathematically, bam, right there with the previous high. It tests it, bam, goes up, and then we get a nice move into May, and then, sell in May and walk away for a few months, some chop volatility, second chance to buy any dips over the summer, and then, it kind of works its way out, and by August, boom, we're making new highs on the stock market. And all this could be similar to what happened back in the Fed funds rate here, where so long as you don't get this like complete breakdown and rates goes to zero like it did during the COVID crash, which this was an anomaly, guys. I don't expect this to happen again. You would just see this curve go straight up like this.
Yeah.
So that's what we.
The only thing that would cause something like that again is like the government really messing with the election, being like, hey, we have a crisis of some sort, so we have to change the election, or like literally, World War III. Hey, we're going to war with Iran and shit like that. Like those are the only kind of scenarios I can see where you might get like an extra dip, like a really crazy one. But again, like that probably would be short lived as well.
Yeah. So if you eliminate this black swan, and Fed just tapers rates slowly like this over time, and then they just go flat. Maybe they raise a little bit here. They go whatever. They just kind of go sideways, kind of like they did back in, let me switch this to log. This particular, I know why, because this S&P, this index doesn't go back far enough. But if you go farther back in time, there's a period here where they did do this type of thing for like in the late 90s and early 2000s leading into that. And so I could expect this just to be like another 10-year bull market potentially for this stuff. And so basically if you take and you eliminate any sort of black swan or unpredictable massive drop in rates, then perhaps we would see this eliminated, and you just see a continuation of this sort of fractal pattern into something like this before, and that just stays elevated and sustained. Because there's a chart that I want to show you that you might never seen before, or maybe you have, where you take the stocks and you measure them against the M2 money supply, and when you do this. And when you do this, like, look, we were trapped underneath this since 2018 was resistance. And we just finally broke out into new territory where like liquidity is lower than it's been in recent years. and yet asset prices are still rising. So you have this weird situation where there's not enough dollar liquidity to fulfill the demand for returns, and even bonds are going up right now as well. So I just think it's we've finally broken out of like where the money supply has kept us trapped for so long. Things are now increasing in value, and this is actually going to be one of those things that increases the wage gap problem, because asset prices are going to continue to go up now, and there's going to be less dollar liquidity available, and it's going to cost more to borrow money. So it kind of traps those without money and no access to credit out of the system, while things are just leaving them behind.
Yep.
And this is what's going to lead to an extended, barring any kind of social unrest, this is going to lead to an extended bull market cycle where people have to work extra hard to pay their bills, to get a little bit of investment money to put it into the system. But the positive is here is like all that boomer money is going to start filtering down into the Gen X, the millennial generations, and then that's going to get deployed into a newer market. I don't think it's all necessarily going to go into the stock market. I know so many folks have said, I've killed my 401k, or I took my pension, or I did whatever, and I deployed it into cryptocurrency because that's where the opportunity is. And young people are going to see the opportunity and they're going to seize it.
Yeah, and I think that's why you got BlackRock getting into Bitcoin and being like, okay, we got to have a Bitcoin ETF, we got to have an ETH ETF, because how can we absorb this money and make sure that it doesn't get away from our market, right? And so it's genius of them. I think they're about 5 years before we hit like an inflection point where millennials start having the most wealth of any generation under their control. I think it's 2029 where you have millennials starting to basically have the same amount of wealth as like boomers and Gen Xers. So, and then once you get into the 2030s, millennials take over. So, yeah, BlackRock's just like, hey, we got to be competitive. We got to make sure that money doesn't leave us.
Mm-hmm. Yeah, and they bought, and who are the biggest shareholders of Coinbase, which is where they're trying to funnel all the rails through, right? They're trying to make Coinbase the premier place where all the crypto is stored, and they own a big enough percentage of it that they're going to make all the money on the volume via that as a conduit, right? Mm-hmm. And so I have a cool new topic I wanted to talk to you about. You might have looked at these in the past, but it's something that has been coming up lately for me personally. I've been looking at the stablecoin dominance index here, which is just USDC, USDT, and DAI. And so for the viewers, let's just frame it up for them. So this is just a linear chart going back to 2018 December. And it's basically showing you guys the history of how much part of the total market cap is the three major stable coins. And so as you can see here, since 2019, through the bull market period of 19 through 2021, this is where the bull market, the bull market kind of died off in May, right? Was it May of 21? Would you say this was kind of that first top on Bitcoin? Yeah. Let's just draw up a relationship for people and kind of explain how this goes and what the flow of money really does in terms of stable coins. And so if you guys have been paying attention to the stablecoin printer alert on Telegram, there's been $1 billion printed 2 times in the last few days. And anytime that you see the stablecoin printer alert come across, it means somebody's minting a shitload of stablecoins that they're going to deploy it. And as the bull market picks up, that's when the most this stablecoin dominance will have a tendency to rise up, is because you're actually printing new stablecoin value and bringing it into the crypto space, which will push up the dominance because you're increasing the supply of a coin. So from a tokenomics perspective, any one of these injections of big spikes up in stablecoin dominance could have been, and I attribute this to that, which is stablecoins being printed, and then the downside during the upside on Bitcoin and ETH, that is representative of deployment of those newly minted stablecoins. So you have it's a 2-phase process where here we are, January of 2020. It was like part of the bull cycle here. Stablecoins get minted. They deploy those stablecoins, so this dominance goes down, but the valuations of cryptocurrencies goes up. then the same thing happens again here in August around DeFi summer, right at the end. And this is where the altcoin space really started to moonshot, was around August or July, August, September, DeFi summer. You see all these stablecoins get printed, and then the dominance falls rapidly after because that money's being deployed into cryptocurrency. So cryptocurrency asset prices are rising, and the dominance of stablecoins is falling at the same time because these are rising against us. Even if this stays stable, this is still rising, which makes this chart come down off those highs. But that only works for so long. And then once stablecoin dominance hits an inflection point in the cycle, which was like somewhere around this period, stablecoin dominance goes through the roof. And the reason is because the bear market stops. Here's the double top on Bitcoin ish. And all of the valuation of the cryptocurrency market deflates out of it, and stablecoin dominance just grows rapidly higher because you have all these stablecoins that acts as the safe haven, but the total market cap just drops off a cliff. And so I'm trying to find out, all right, with that in mind, in the context of that, where are we at now? And where I think we're at now, under the condition that we're printing more stablecoins lately, you're seeing that come across on the Twitter alerts, is we're somewhere in the early phase of a move, something like potentially like this, where we're just starting to come out or go into like a really huge moment of lots of new stablecoins, or maybe perhaps we're even here where something like this, where we're about to see a huge spike of newly minted stablecoins that will then be deployed into the cryptocurrency space and really push up those valuations.
Yeah, no, I agree with that 100%. And eventually, at some point this year, when they do start printing like money from the Fed again, like overtly, and giving people stimmy checks at some point or something like that, if that happens, then you see like that just it increase crazily.
Yeah, so I've got my eye on stablecoin dominance because I do think it's hit a low here, and I think a lot of people would look at this chart and they just say, "Oh, when stablecoins goes up, it's bearish, and when it goes down, it's bullish." But it's not so cut and dry because you have to know where you're at in the swing trade and part of a cycle, basically. So there is some nuance to reading this chart, but it's definitely something that I want you guys to add to your toolbox.
Yeah, and I like that nuance because I've seen some investment advisors, people who are accredited and all that stuff on Twitter, and they don't understand like where that falls within the 4-year crypto cycle. And if they don't understand where that falls, then sometimes they make assumptions, and because they don't understand the fundamentals of what moves the whole thing as well. So yeah, keeping all those things in mind is really, really important for the nuance.
All right, so maybe now we'll shift into some questions from the chat. We talked about the Fed pivot, so I hope that covered that. Well, some of your questions are about you guys want to see loan token. Some of you guys want to see some altcoins on the PRC20 side of things, and you want to see the Pulse X to Pulse ratio. So maybe we'll just hop into the Pulse chart, start there, and go from there. And here we go.
One quick question for you, because I kind of want to understand your like favorite tools or kind of like how you generally analyze things. One thing I like to say is like there's like 4 buckets that you can kind of distill a lot of TA down into. It's price, like support, resistance, moving averages, that type of thing. Cycles, and just in terms of time. And then you have trend, which is, whatever your trend indicators are, maybe Elliott wave, MACD, or no, sorry, MACD is more of like a momentum indicator, but like Elliott wave or Ichimoku cloud or whatever it is that you use to determine trend. And then the least, important one, I think, is just momentum indicators like MACD, which is a lagging one, or RSI and stuff like that. So like in those kind of like 4 ones, what would you say you kind of like tend to like lean most towards and use the most for your analysis? Like,
yeah, I think you always got to start first and foremost on like a broader time frame, like a monthly or a weekly, and then work your way in. And so then in terms of like what's the most important is price structure. So like support and resistance, I think, is a huge part of it, but also looking for the way the price moves over time. So maybe it's too complex of an answer. Maybe the answer here is just price. Like nothing is more true than price. And when you've been looking at charts for 5 or 10 years, you can see the motive in the chart without even putting on any indicators or anything. You can see in this chart certain motive. Like obviously, number one thing, look how that's just been a major support. And in terms of price, you could just look at this bar chart here, and this is on a daily. You can see this fat wick here and how that became a support structure. Like that's not something that the price will go below. It's and the indicator for that for me was these wicks on this action here on this is a pulse against Ethereum. So this is pulse wrapped pulse trading on Ethereum against Ethereum, and this is in the Ethereum valuation. And so there was a coordinated attempt here by some predatory whales to literally push pulse down against ETH on the ETH side, and it was met with massive bid support. And you can see that in these fat wicks, and continually making and respecting that trend line there. Now it did break down here, and that was like the scary part of the fake out moment. But your overall base support here that held. So you could have taken a trades based on that information, and like it really just came from the bars or the price. And I think that's kind of how my analysis starts in a lot of ways, and then you can kind of distill it down into other things that you're talking about.
Oh, I like that. Yeah, I agree. Like, price is like massively important, and one of the things, like that's the hard part once we get into like a crazy bull market and you hit new all-time highs, because there is no previous price action to really compare it to, and that's where I think a lot of people start getting a little bit lost, because it's hard to imagine the parabolic growth and everything that can happen in crypto, because it happens so freaking quick.
Yeah,
that's where I think timing and cycles is so important for Bitcoin's 4-year cycles.
Oh yeah, and maybe it's important for me to make that clear to people is that a lot like you, what's more important than anything is the 2 to 4 year outlook. You should never be looking at a weekly or a daily chart without having some sort of clear direction, plan, strategy that's like looking out 4 years into the future, because these are cyclical markets, and being able to swing trade and just hang on is pretty much the most important thing. Like why bother looking at the day to day in a lot of ways? Like you can for extra edge, but it's not the most important thing. I would say market cycle theory is probably the most important thing foundationally that you want to know. And then you can build all this other Rube Goldberg shit on top of it. Like, yeah, it's nice to know best places to buy, but just generally buying the 4-year market cycle lows and selling the 4-year market cycle highs has been one of the most winning strategies over the past 15, 20 years, 15 or so years since crypto was started, right?
Yeah, 100%. And so like merging those two things, time and price, that's what creates the chart, right? It's the X and Y axis. So, like once you have those two things, that's all you need. And then everything else, like you said, is just kind of minutia within there to get more accuracy. I think I agree with what you said at the very beginning too, which is, go to the high time frame first, right? And then kind of go down into the lower time frames. Cause like the weekly chart on Pulse, I haven't looked as much to Pulse to Ethereum. But yeah, here's the Pulse to DAI chart. On the weekly, we got that support, from that first area clearly.
Look at how respected and this is here. And this is why I thought, leaning into support and resistance was so pivotal, and especially on those longer time frames. This hammer that pushed back up off that retest of SAC price was confirmation that, you had to break out the extension off that breakout level, and then that retracement to retest that baseline, which was SAC rate, and then boom, and now it's continuation at this point. Next weekly candle, you could be up double where this wick high was.
I think the best buy prices on Pulse Chain are that last week for the immediate future, and I think we come back to that area maybe once or twice before we break into new all-time highs, and then I don't think we go much below there anymore.
I don't think we're going below SAC rate on Pulse.
Yep.
It's kind of more complicated with Pulse X and Inc., but this weekly chart on Pulse is looking amazing.
Yeah, it's great. And that's what the beauty of like zooming out, right? Is like shit's way simpler. When you go to the daily, like all of a sudden it gets a little bit more complex, and you're like, okay, what's it doing exactly? You can still see the same pattern, but sometimes zooming out, right? Going into, I always say when in doubt, zoom out. Just a lot of people tend to really love going deep into like, hey, what's happening right now,
Yeah.
and going down to like the 1 hour chart and whatever. But it's like, bro, like you'd save yourself such a amount of, stress and headache relief if you just, zoom out to the higher time frame, make it, keep it simple, stupid kind of strategy.
Yeah, the really skilled expert level leverage traders are going to need those like really micro
Right.
time frames, but for most of us, it's unnecessary because the gains in crypto are so good. You shouldn't need to use those. A lot of
Yeah.
times, a winning strategy is just bringing in $20,000 or $30,000 if you can at the lows and just waiting. Like that's
Dude, you
so
know what the
easy.
craziest thing that I learned in the last cycle was, is all you need to like make freaking crazy bank in crypto is to find a project like Pulse Chain as early as we are right now, put anywhere between 10 to 50K in it, and bro, like
You
you
just
are
wait.
good to go. You are good to go.
Yeah, the more you diversify at the bottom, the more you can wreck yourself, which is why I tell my members like once you've 10, 20, 30x your original stack in the main core assets, then you can look to diversify. Too many people spend this bottom period diversifying into shit.
Mm,
And it ends up diluting their performance because it adds work to your load and you don't always capture the micro highs. So even if a coin went up during this down period, and then this other coin went up a little bit and this other coin went down a little bit, and you're in 3 to 4 different coins, but you're not at the computer screen during all this, you're not going to capture the best
right.
ratios against Pulse to bring that money back in. And so I
And why
always
do
tell
people
people
do
to,
that?
I think
Because
it's they're
I
gamblers.
think
They
it's
just
because
they're
they're bored.
Yeah, they're bored. They got an itchy trigger finger. They feel like they're missing out. The feeling they're letting emotions
Right.
drive their strategy instead of letting the market reveal itself to you. Like a lot of times, if you do want to be more active in the market, manage an LP position, learn LP and manage that because that's where you can actually get paid to DCA in and out of a position over a
Mm,
rangy period. That's one of so maybe to close out the question about how my favorite ways to distill down TA is that what I teach is, and I'm sure it'd be beneficial for you to do if you're not already doing this with the crypto mindset members, is distill this down to, because ultimately, the reason why I'm here is to teach this, to make the Richard Hart investor class the richest, smartest group in the market, so we can all work together to make the price charts do even better than they could otherwise. And how you
yeah.
do that is you teach people the tripartite method for analysis, which is first of all TA, second of all liquidity providing or looking at and analyzing liquidity histograms and pools, and then the third element is chain analysis and knowing who's playing the game
Mhm.
with you. And if you
Yep.
can distill it down to those three basic things, it really puts you in another league or another class of DeFi player. DeFi trading, and then to an extension, there's a fourth leg that's less talked about, which is understanding tokenomics, initial distribution, supply and demand, and crypto unlocks and vesting periods and all this other tokenomics level stuff. That's an extra element when a new project comes out that you'd want to look into to analyze. This is what you guys, I think, do. I don't know because
Yeah. Well, that,
yeah.
yeah, and like, yeah, I want to talk to you about that, like it off stream too, as well, like in more detail, because yeah, we do a lot of that, and then at the same time, there's some nuance within there. It's like, hey, we can add this, we can add that type of thing to make sure everybody gets on the same page. But what I really like about all of that is, you know, I think the biggest weakness of a lot of TA people out there is they are not well rounded. They don't look at the on-chain data. They don't look at liquidity. They don't look at a lot of stuff. They just simply go on the chart and that's it. And they think that's enough. And I've seen some really experienced traders out there that do very, very well with just pure TA. But like every time I hear their analysis, I'm like, bro, you know, all you need to do is just look at the fundamentals a little bit extra, right? Or the on-chain data a little bit extra, or the DeFi aspect a little bit extra. And if you did that, like holy shit, like you would just supercharge your TA. And
Uh huh.
so yeah, yeah,
I had a guy on here. It's one of my recent live streams. You guys go dig through the archive here on the YouTube channel, but his analysis is very. He's like a just a regular TA guy and doesn't go very far in depth with it. Just trades momentum, and he's done well for himself. But his analysis is so bland. Sorry, bro, if you're listening to this, probably won't be, but it's so like level. It's like level 0.5. It's not even hit level 1 TA. And yeah, he's good at it and he makes money at it. But and it shows you how much opportunity there is in crypto, because if you're skilled at momentum trading, you almost have to have you don't have to know any tools or indicators. You could just watch the
Mm.
bar chart. But if you really want to be well rounded and less stressed, I mean, you will take this on as a serious serious investment in yourself, and you'll master a lot of these aspects to really get edge.
Yeah.
Not that that's required. There's plenty of us that take a good call or look at a good project fundamentally and say, hey, I like the founder, I like the token allocations, I'm in. I'll give you an example of something where, if fundamentally, like the Mintra chart here.
Ooh, I
So
haven't looked at this in a while. I like this. Oh shit, we're making money. I didn't even know.
so I'm looking at it here against PL. So by the way, guys, I always chart against Pulse. I don't care what the dollar chart says. If anyone posts you a dollar chart, they're only giving you half the information anyways. So make sure you're charting. If you're on Dexscreener, click this little button that says USD or /Pulse. If you click that, it'll switch it to what is your coin valued at in Pulse terms. So this Mintra is at 50 Pulse per Mintra right now. And the reason why I bring this up is because, I'm pretty well connected, and there's conversations that are had, and it's funny how the conversations are had, and then things like Pulse Domains launches, which are those domains are tradable on Mintra, right? And then you get this breakout move, right? So from the low of this ascending triangle out, I mean, it made an 87% move, but you can see that there's clearly, and you can dig into the chain and look at the wallet that printed that 10x candle, or this one here, and this move up. And you can see who's accumulating these coins, and you'll see that they'll accumulate these Mintra coins and they'll stake them in the protocol to basically acquire dominance over that network. And obviously, they're seeing value here. And if it's a group of whales or a pod of whales, as I like to say, that's stuff that you're not going to get from the TA. I mean, you can see it in the TA because the general trend here is like up and to the right slowly. But there's definitely some accumulation happening in this chart, and the conversations and the fundamentals are kind of reinforcing that.
Yeah, and one of the best on-chain data people in the Hex Pulse space, I forget Silver, the Antidote, right? If you ever, I don't know if you've talked to him too much, but every time I talk to the guy, I'm like, holy shit, this guy is dedicated to on-chain. And so, seeing people like that, like you don't have to do all the work either, right? Like there's sometimes like you can't do all that stuff. Like it's impossible to do everything. And so it's like, hey, go find people who are doing some of the work for you that, have good information too. The one thing I would say about, kind of what you were putting out here too, is so the crypto to crypto chart, especially like in an ecosystem where everybody's trying to gain more of the main asset, right? Everybody in crypto is trying to gain more Bitcoin and Ethereum because those are the main layers. Then everybody in the Pulse chain ecosystem is trying to gain more Hex and Pulse chain, right? And so if you understand that, then going to the crypto chart makes a lot of sense. It's really important. And actually, when you're looking at support, resistance, and price indicators in that ratio, those tools still work extremely well. The one thing I would let people know as well is the dollar chart's not useless. The majority of people, even though the whales are looking at the crypto to crypto chart, the majority of people are dollar biased, right? Because
100%.
That's the world currency.
Thank you for clarifying that, because, and I'll back you up on that 100%. So here we got Pulse X measured in Pulse. I know this was one of the requests, and this is perfect segue into this conversation about the dollar chart. Here you can see the dollar chart here. When we ran into some resistance, but look, the dollar chart looks pretty good. It hasn't quite made, it hasn't taken out these candle body closes at this level here quite yet against the dollar. But this is the chart that everyone's watching, right? That the market is watching. And so there is definitely pretty key levels in here. I would say that these key levels are ultra key at the beginning of a bear market, because that's when all the people that want to take profit are just looking at the dollar chart, and every time it goes and hits a marginally, like it'll hit a lower high and it'll roll over. It'll hit a lower high and it'll roll over. So when the sentiment is bearish, all they're looking at is the dollar chart, and that's a huge signal. But now in a bull market, I really encourage you to look at something like the ratio here on Pulse X versus Pulse, because look at how perfectly this is playing out here now. Now look at how this is came up today and actually broke through. The candle was above these
Mm.
candle body closes in the ratio, meaning PulseX is overperforming Pulse versus instead of the dollar. Why would that be? Because on the prior run up, Pulse went a lot higher, and now PulseX is overperforming the move on Pulse. So it's actually showing relative strength here. Now, there's extra edge you can even find even further. One of my indicators I like to look at on this particular chart is the volume profile. And I'll just go over the entire chart history. And it shows you here, look at where my green support box is. This is where the most volume was ever traded between Pulse X and Pulse, and which this acted as a support zone. And then there was the breakdown to the bear market lows. And there was a clean ascending triangle bottoming structure that came out of here. And the first target level was here, right at where the highest volume traded area was. And we tried to flip it as support, but it broke down. And actually this parabola here that was formed was broken, and that's right where the breakdown occurred. So we were all over it in the boardroom, and I actually went and documented this entire thing since back in here, all the way going back into August. So we got the receipts, but I actually was calling for this level. See how this brick here is like decently far out, not quite as big as here, but this was the level I was looking for. At this bottom, I was calling for this level. Level 1 was here. Level 2 was here. Well, we weren't quite full on bullish yet. Richard hadn't came out against the SEC quite yet. So we did get a nice move up into that high volume traded zone and then broke down, and we made a higher low. So this was the lows. We had a higher low. I think there was some bearish divergence that played out in here. So this time I was like, well, look, first take profit level here, second take profit level right up here where we had the second most highest volume traded area. And look at how the TA respected that level in terms of where most people were trapped from back in the beginning in June and July. And now here we're trying to bust through that and get out of this this rising channel.
Right. And when you're looking at a crypto chart, what are you taking profit in? You're taking profit into the lagging asset. If you're looking at it as a take profit opportunity, right? You're not getting out into dollars. And the other thing I was going to say before as well is you have to know which analysis tools work very, very well on crypto to crypto, and then which only there's some a lot of trend indicators, in my opinion, work best on the dollar charts, because that's where most of the psychology is. So like you want to be looking at both crypto to crypto and crypto to dollars, but you have to know, okay, which ones work for which tools work for which scenarios. So, and I think a lot of people sometimes try to apply too many things to a crypto to crypto chart. I think on a crypto to crypto chart, you have to keep it simple, and that's exactly what you're doing here. You're using a lot of price-based indicators and previous volume indicators, and that's the best way to do it, I think.
Mm-hmm. Yep. So to wrap that little bit up about native, valuing your stuff in the native coin, especially in a bull market, is the goal here, guys, is to accumulate as much pulse and hex as possible. So whenever the ratio favors your underlying core asset, take it, because it's the market giving you an opportunity to multiply your bags during a bull. And then when the core assets make a big move, it's the same thing with Bitcoin and altcoins. First, the money flows into Bitcoin, then it flows into Ethereum, and then by decree, it falls into altcoins after that. So there's like a cycling of money from one thing to the next thing to the next thing. And notice how you're seeing that and also reflected in sentiment, where Inc. was in the complete trash and nobody cared about it, nobody wanted to talk about it, and everyone was like Pulse and Hex. And by the way, I'm guilty of this too. I think that I still am firm that Pulse and Hex are the plays, but if you missed out on the ink trade here, if you thought it was going to go lower at 40 cents and you sold your whole bag, you missed out on a 10x move where you could have then captured more return. So it's the lesson there is that never go full degen and never dump your entire bag. And always in the case of anything that's closest to the core, which would be PulseX and Ink, they will have periods of overperformance that you're going to want to, if you have some exposure, and try to capitalize on the bigger moves. Currently, I'm looking at that $10 level right now. So between $8 and $10 seems to be that Ink chart seems hungry for it. I think people were underexposed to Ink.
Yeah. I think a lot of people, they didn't want anything to do with it, and then some whales are just like, all right, let's buy it up. I think the sentiment lows for everything in the ecosystem was in November, December, man. Like it's crazy how quickly the community has turned bullish on pretty much everything.
Yeah, yes, everything except now they're so we'll quickly just look at the pulse X to ink ratio quick. So it in terms of overperformance, ink did overperform pulse X by 100%, but it overperformed PLS in the ratio by about 300%. I'm sorry, this is hex. 300% gain over hex. Can you imagine? And this is going to get into my next comment, which is like right now, the sentiment and the thought process and the people that are invested in this ecosystem are starting to get bearish on the hexes or bored with them. And what does that mean? Well, that should mean that it's a screaming opportunity. So if we look at P hex here against Pulse, look how undervalued it is from its highs. It's down almost 50% against Pulse. And this to me is telling me a couple things. Number one, it's telling me it's a reverse contrarian play the same way ink was. It can only go down against the ratio for so long before a whale steps in and sees it as a screaming buy opportunity. And this is just patterns aren't always the oracle, but this is a form of broadening wedge and an equal broadening wedge. And typically what you'll see is this thing's going to come back up and potentially even test these highs, which would be, someone told you, even from here to here, if you're a conservative trader or like short-term investment into hex and then to flip back into pulse, for example, you could get 50% more pulse just in this move here. But if you understand the TA and the kind of like the long-term thesis on hex and where it's being accumulated by like a core group of whales for the T-share mechanism, it could go as high as 133% against pulse. And you could like 2x your stack of pulse just by riding this wave up, just as a contrarian play, because the longer this stays down and out of the count against the ratio, the better your odds are of seeing upside. And that tends to be a self-fulfilling prophecy in a lot of ways. A lot of the ways that people are now looking at ink and starting to ape their assets into ink to chase that pump.
Yep. No, that dude, I didn't look at this chart before. That's looking nice. I like that.
Got a nice little wick here too on the daily. If this closes green, and there'll be a nice little hammer, like which could be signaling that clean double bottom here, marginally higher low, and then a hammer flip green, and then bam, this thing could break out of this downtrend. And I mean, we could be seeing like 37% move against pulse here in the not too distant future, or it could stay down for longer and just grind along this grind line. Either way, the opportunity is still kind of similar in the way you'd read that chart.
Yeah, well, the downside risk on it is low relatively versus the upside being pretty good. And yeah, just make sure you're doing risk management when you're taking positions, right? Like, don't go full retard.
100%. Don't take a whole all your pulse and put in here, but you could start putting it in percentages as it made new lows throughout this period.
Yep.
And then here on EHEX, same thing. Honestly, it was the buy of the day here. It hit the bottom of this grind line on a wick, but it's holding the range here, the range lows of 70 pulse per EHEX. Different people have different opinions on EHEX. I'm an EHEX bull. I think EHEX is going to surprise a lot of people this cycle. Yeah. And look at how we spent this period here just kind of grinding along the bottom of the channel here. And most of the time, fair value, the market is saying fair value is between 75 and 100 pulse per EHEX. So we're just back in that range at the lows. And the ultimate buying opportunity, I think, is presenting itself here with a slightly higher low and a wick. This may turn into a hammer by the end of the day. We got a few hours left. And, if you zoom out and look at these things on weeklies or monthlies, it may even give you more clarity. There is some bullish divergence forming here on this one on the RSI, and it's at that trend line there. So as long as we get a pop off that level here on the RSI, perhaps this flips green. It may signal that EHEX is ready to make a markup against Pulse. And just from here to here, that's a 53% move to the middle of the channel. So definitely a good ratio trade there as well.
Yep, 100%. So yeah, I mean, like, that's why I love doing these types of streams, man, because like sometimes it's just like, hey, look at this angle, look at that angle. And sometimes it's that simple, right? You just have to just look at a few things and be like, oh, okay, I see the opportunity here, and take some advantage of it. Because I think there's a lot of people that'll listen to this information and be like, kind of like what who was it? I think somebody said, wrenchy teeth in the chat said, it's probably nothing.
Yeah, right.
we,
Probably nothing.
but if you take advantage of this type of information, you actually like go and execute on it, like it'll change a lot.
So because I've been such like a screaming eHex bull this whole time, I have to show you guys a tweet that I made, and so I'm going to show you the the eHex chart, but it's going to be measured again in another crypto. It's measured in ETH terms. It's this chart, but I want to show you the breakdown that I did on the tweet, so I don't have to redraw everything out. Well, by the way, the Maximus DAO guys, they're making a perpetual contract staking pool platform where it actually is going to allow you to stake Hex into team type pools, but also get all the COM, Hedron, and Icosa derivative rewards too. So that's, dude, more fundamental bullish analysis coming into the Hex space. So let me see if I can find that chart. Here it is. So what is going on here? So, okay, so check this out. I broke this down. This is Hex on Ethereum, but it's measured in Ethereum terms. So you have all these different variables working in your favor. So let me just do a play-by-play here. So first, we had the crash after we got rejected off this orange line here. This is where the golden cross is about to form currently. But so we got rejected off that golden moving average, broke down after the fork, right? Because we had this period of FUD, divestment of resources and protection of their capital, and all these different variables leading into the Pulse chain mainnet launch. So people had the most optionalities after the fork in a time of uncertainty, which brought us down to these lows here. So what we did at the lows here in June and July was build out this falling wedge, which also was bullish divergence here on the RSI for the first time. Then it broke out, closed candles a little bit higher than the previous candle closes. It looked in pretty good for bullish action. And then we got into like a bull flag sort of pattern, which it's a descending channel or a bull flag, you could have said. But then we had the black swan in the SEC crash, right, where the whole entire RH ecosystem tanked. From that low, actually another bullish divergence formed, and inside of there was this little microstructure of an ascending triangle with a fake out on I think this little fake out here was because of all of the FUD surrounding, eHex dying, and pHex was the only way and there was no other way, right. Which ended up being completely false, because as this accumulation range ended and we had the big breakout from the Alex whale, this started wave one of a 5-wave macro Elliott wave sequence for eHex here against Ethereum. So from that high, we came back down, broke down, we tested, we had now broken this resistance line. Where is that coming from? It's coming from the daily candle closes of the 12-cent top last April, and then the 6 to 8 cent wick top of the candle close here back in June, where we broke down from. That resistance was then broken by the Alex whale. We started to form support on that and bounce off that as a bullish consolidation on top of a grind line. There was a fake out break below because, again, sentiment was extra negative. But inside of there, we built a little microstructure. Again, another second ascending triangle that faked out, broke down again into a third, bigger ascending triangle where the break of that resistance one was confirmed. Fake out. So this is your wave two retracement. Wave one, wave two macro retracement. Inside of here, you had a bullish divergence for a second time, or for the third time. And now we had a secondary push off all the bullishness coming from RH coming back. He's throwing punches, he's fighting, and we started a micro Elliott wave sequence, which I think we are now in wave one, wave two inside of wave three. So this bigger wave three from wave one, wave two, we're in wave three. We're in the middle of it on the macro Elliott wave, but we're in the middle, we're at the end of wave two, right before this is consolidation in a bull pennant, right before the golden cross, right before the break of this major global resistance 2 line, which goes from wick to wick. When this breaks, guys, eHex is going to moonshot.
This is when Crypto Banter said, hey, everybody in crypto, buy
right.
some Hex.
Yeah, right. So it's coming, guys. Patience is a virtue. I've been tooting the eHex horn for long enough. I think anybody that captured these lows, 0.3 of a penny, 0.4 of a penny, half a penny, you guys are going to be the stars this cycle. I wouldn't be surprised for eHex to go take out the all-time high against the dollar, and we'll see how it plays out for its Ethereum pair, depending on how Ethereum looks this cycle.
Yeah, no, I like that, and I think the Hex and Pulse community has been through a lot the last couple of years, right? But that patience and that perseverance, I think, is going to get rewarded, very well this year.
Yeah. I'll spare you guys too much on the liquidity pool stuff for today because we're coming up on an hour and a half, and I promised we'd start to close it, wind it down. But we'll just run through some charts. Communist, I think, is a screaming opportunity. I have here, if this parabola plays out again for Communist. Now, for those that don't know, Communist is a rewards token given to long-term hex stakers. The supply is into the quadrillions, but it's actually oddly scarce because of how it's distributed. So the only way you'd have com supply is if you staked really long. And if you just staked medium length, you really don't have any supply. And only 25% of that's available to you when you start a stake. So most of the stake is delayed out into the future, and most of it's given to long-term stakers. So there's been a bank run on the circulating supply, and a whale has been accumulating, or multiple whales have been accumulating this one because of the dynamic of what we call the secret weapon. It's a potential for turning com into like an automatic marketing arm for hex, which basically reinforces longer term hex stake lengths, which locks up hex supply, which makes a more buy pressure, less sell pressure on the chart, which increases the valuation, which then potentially could increase the valuation of the com price because there's more of that unavailable to the market. And inside of there, you could be seeing anywhere from like a 100 to 300x move. I'm looking at like anything in that range just because of the supply dynamic and how illiquid it is. And the higher this price goes, the better it is for hex stakers, because then they'll be able to go stake hex long and get com back immediately, 25% of their bonus, get that back immediately, and then go turn that into whatever they want. So it's kind of like a rebate or like a coupon. Like, look, I bought hex off the market, I locked it up long, I get 25% back in com value. And then if this chart is going to perform like I think it will, it'll be actually a decent amount of dollar value for the guys that's locking up that hex supply. And so there is a group of diehard com hexagon players that is trying to make this a reality. So I still think it's early enough that the opportunity is there in this chart. And yeah, I think it'll just hold its trend and continue to climb on a scarcity tokenomic.
Nice. Yeah, I like opportunities like that.
And then Hedron and Icosa have been all the rage lately. Here's Hedron against Hex. Here I am measuring it against Hex. It looks like it's ready to at least test these highs. It's still it hasn't made the move yet in terms of Hex price. And then so I'll just kind of filter off this one and go to the Icosa trade because that's been more interesting lately. Your friend Sami's been championing Icosa due to its scarce supply as well, and it only comes into existence through the buying or the burning of Hedron. And so without getting too deep into the weeds on this stuff, it is also ultra scarce, but you could still get like a shark position for like $5,000 or $6,000, even though it's had a 10x move off its lows. But some whale or some group of people obviously recognize this opportunity and marked it up 10x, and now it's going to be a free for all to see who accumulates inside of this new range. I have here the Hedron fractal from a few years ago on this, just to say like, oh, what would it look like if we saw some sort of accumulation range inside of here before a breakout and a move higher.
Yeah, a lot of people have kind of left it for dead, and clearly it's not.
Loan token was a request. Here I am charting it against Pulse again. I noticed that a couple indicators I'm using here is the RSI. It seems like the RSI on this one has been respecting the 30 level. And it remains to be seen if it does get a break below. I think if it breaks down below 30, it's an oversold territory, and it would be an opportunity to capture some loan token for the long term in the event that you were going to ride this up for price appreciation. I've also been watching the historical volatility, and it's at the lows. So it's at its lowest level. You can see it's below 15 currently. So that volatility usually goes to its lowest points before some sort of a spike in volatility, which can be either direction, but I tend to think that market makers are absorbing supply right here at the bottom of this channel, and I wouldn't be surprised to see it pop up and out of here and try to make a move for the midline within the next like 2 weeks, just based on that. And then perhaps it continues to trend down and sideways as these loan token unlocks continue and as there's still high inflation from the stability pool.
Yeah, loan's been kind of, just very, very boring. And, I wouldn't go as far to say it's disappointing yet, because obviously there's a lot of market left. But yeah, whenever you get that type of sentiment on a coin, usually somebody's going to take advantage of that. So that oversold or that over negative sentiment, will be absorbed. And sometimes it's the whales within the ecosystem itself, pushing around the price, and sometimes it's new players as well.
Yeah, so I got a request to look at the Axis token. I don't know if we probably haven't looked at this together quite yet, but
No, I haven't. I don't think I've ever looked at this one. You didn't. You put it all in at when it first came in, right? You just went no.
yeah. So the Axis token is interesting. I stealth launched this token. Here it is on log. It's nothing else on Pulse Chain looks really like it. It's here it is. So if I switch to linear. I mean, I think it's technically the best performer in terms of percent from the all-time low.
Okay.
They did it literally is at a 2.2 billion X, like billion with a B. Yeah. So it's like, let's see, 2.51 billion X. It's like crazy how well this has performed. And a lot of that is attributed to stuff I couldn't control. So I stealth launched this. And the market didn't really know about it, but slowly, like organically, people in the crypto in the RH space that have been following me for a few years, like slowly started to accumulate. And you can see that there's this like slow bullish accumulation that just kind of continued to happen because obviously nobody had any supply or knowledge of it. And yeah, there's sells that comes in every now and then. Like we had a big early guy that bought at $10 come in here, and he did a $25,000 market sell when the pools were only like $100,000 deep, and it knocked the price down like 70%. But generally, the thing is trended up and to the right. It was originally like an educational tool to teach people about like this is what a pure chart looks like when it's completely organically driven, and you have all the chain analysis available on the website, so you can see the holder counts, and LP pools, and it's pretty simplified and distilled down. Like there's only really one major pool, and that's on PulseX V2. So it makes it easier for me to teach people about the relationship between showing people on the chain, this guy did this, and this is what happened on the chart. It also allows me to compare the dollar chart here versus like the Pulse chart, where I can, and even against Pulse, technically it's a good buy right now. So even though we're making highs against the dollar every day because Pulse is performing in Pulse terms, we're starting to create some sort of like a rounded bottom, it seems, and hopefully we'll see some kind of bullish action coming in, and this support level will hold from a candlestick perspective. There was obviously a little fight right here between the bulls and the bears on this one, and this is the level to hold now. So if this holds, a retest of that and a go, Axis could break this longer downtrend resistance in fairly short order. So there's pretty limited amount of holders. I think there's only like 400 holder wallets. But to see the price do that on such a small supply has been pretty revealing for a lot of people.
Yeah, there's a decent amount of liquidity in it now.
Yeah, there's like 400,000 on here, and there's like another like 125,000 on 9mm. So there's liquidity there, and I mean the goals and the direction of it. I've never told anyone like what could happen with this. I'm keeping it pretty quiet. But on the Hex conference stream, I did say that wouldn't it be cool if I think it would be cool if this thing rewarded Pulse Chain and Hex users. So
yeah.
So that's that one in a nutshell. Looking pretty good. Thanks for asking for that one, Bets. We looked at Mintra. This PTGC trade has been crazy. So like it basically built out of this ascending triangle. This one's got an interesting set of tokenomics behind it. The axisALiVE members took this trade down here in this region because there was a lot of confluence of data between the stochastic RSI, the regular RSI, and the MACD on the daily. I think it was. We had like, let's see if I can remember how this played out. Yeah, so there was a bullish momentum cross at the lows, double bottom on the RSI, and then a bullish cross on the MACD, all like bam, bam, bam right after each other. So we took that trade on those lagging indicators, believe it or not, and kind of held through this sideways period, and now it's kind of made up a decent move. I think we're up like 3 or 4x on that one from that area. So I think that this one is going to go higher, and parity is up here. So like if you did a measured move, like from the lows of that one to that structure, to top of that structure there, and then you put it out, and you'd basically be taking you to Pulse parity. So that'd be pretty cool to see. They got a cool, interesting tokenomics scheme behind that one.
Interesting. Yeah, I didn't look at that.
The other
Yeah.
one is so time token. It's like a dividend token. If you for people that are swapping through Internet Money Wallet, there's a small fee that's delivered to 100% of the fee revenue is delivered to time holders. All you have to do is hold time in your wallet, and you get paid Pulse Chain tokens for that. And so like I think that's like the value prop, and any kind of upgrades or adjustments to this one, I expect to increase volume through the swap, and because they are quoting some of the better quotes. And like Piteus is still like my go-to, but I mean, if these guys keep improving it and making it more accessible, I don't see why the dividends wouldn't continue to increase. And it's pretty limited supply. There's only like 2 billion of these things, so having like a 10 million time bag is like big in the event that it goes up and appreciates in price and continues to pay more yield over time. I think a lot of the concepts right now that are floating around is like passive income for the end of the bull. Like how do we acquire positions now that are going to pay passive income through the bull that you can then also capitalize on at the top, or get like once in a lifetime buys on some of this stuff that's going to create floor prices higher that you'll never be able to come back and get that amount of units ever again at that price.
Yeah, make sure make sure to realize that profit
100%.
once the time comes.
Yep. That gets into the market cycle theory stuff too.
Mm-hmm.
So I think that's most of the ones that I want to look. There's tons of opportunities on Pulse Chain, guys. Like it's relentless.
Yeah, and a lot of times it comes down to like liquidity. Like okay, is this one, you know, so low cap and so illiquid right now that it's really only good for making a quick buck here or there, or is it big enough to like put a sizable position in and be comfortable with it? Like I think that's one of the big differentiators between most projects on Pulse Chain, because we're so new and so early in this whole ecosystem that stuff's going to start off. It's the same thing as what crypto does on a macro scale, which is it gives opportunities to the average retail trader first, and they can take advantage, and then the whales actually have to follow.
Isn't that beautiful though? Oh man,
Yeah, it's great.
so sweet. Someone just said that. Hey, look at the hex chart. Look at how it's printing that green hammer off that low currently on the ratio of hex to pulse, and that's happening on pulse weakness. So you could see. Well, never mind. It was weak. This was a red candle just a few minutes ago, guys. Stop buying. Stop buying. I want more.
Hey, it's going up.
No, I'm kidding. I'm kidding. Congrats to all the guys that survived. I mean, this is going to be an amazing cycle. We are so well positioned, and you earned it, guys. Everyone that's in this thing that held through this down period, we earned it 100%. And I'm so proud of Charlie for seeing the value here and change and updating his worldview compared to like 3 years ago when I had to do that too. I was driving home one night from my Bitcoin mine, and I'm like, dude, Richard Hart's going to be a trillionaire, and I have to accept that. Like I have to accept that Richard's going to be a trillionaire. And when I finally did that, I'm like, and in the same moment, I'm like, we're going to have to sacrifice Bitcoin to TradFi. So it was like this dual eclectic moment where I was caught with a ray from God, and this epiphany came upon me. I'm like, wow, the billions of dollars is going to flow in through TradFi legacy into Bitcoin. They're going to take full control and squeeze the volatility out of it. But all the opportunity is going to be in on DeFi. And I thought Hex was like the thing to go after. And I had to suck it up and say, hey, are you on Team Richard or you're not? Because this is if he wins this fight against the SEC and wins it on behalf of all of DeFi, and his coins, Hex and Pulse, are front and center in that fight, where do you think the money's going to flow first? It's going to be into eHex, and then it's going to be into all the Pulse chain stuff. So,
and don't worry about the FUD and the people in the mainstream parts of crypto who talk shit and all that stuff, because at the end of the day, what do people actually vote with, right? Where do you see the true, exactly, that's where you see the true sentiment of the market. And it's like, hey, there's going to be a lot of people like Tone Vays that it's like closeted hexicans, closeted Richard Hart Maxis and Pulse Chain ecosystem people. I bet you there's a far larger amount of those that will be coming out this market than you would expect. It's kind of like Vanguard not listing the Bitcoin ETF just out of spite. And once they do flip and they go, oh shit, I guess we got to put it out there because we're losing customers, that's a good sign at the end of the market. So when you do start seeing mainstream people finally getting Richard his flowers, which he will rightfully deserve within this bull market, could be a turning point, or at least a sentiment change to be like, everybody's in on this trade now. Oh shit.
That's why, like, it's like you were saying earlier in the call, like how when things get really parabolic, like you just can't predict, because you can't really predict the amount of new user. You can't predict adoption really when things are going through a viral phase. It's
Right.
just impossible to do. But you can kind of look at the fib extension tool and try to make some sense of it.
Yeah, parabolic growth is something that a lot of people aren't used to, and once you get it, you're like, oh, that's how this market actually works. Okay. I like this.
So we got a Dave C said, hey, this was an amazing show, and he wants us to do another one after the Vegas meetup. So we'll definitely have to do this again.
Oh,
Hey, I'm gonna bring up Hexakin Hill here and just say, hey, thanks, man, for sitting in the background. I appreciate you helping out. I'll probably coming to a close. Charlie, you have any thing you want to talk about? Maybe talk a little bit here about the crypto mindset course and
Sure.
show that link. I'll post it in the chat.
Yeah, we put a link out there for you. Right now I'm in Miami at a hotel, so not my usual location out in Vegas, because we just did Fresh and Fit last night, and on Friday as well. Trying to let millions of people out there in the world know about Pulse Chain. And so the reason why we're doing that is because we're going into our next crypto mindset course, which for anybody who may have not have heard of that, that's me and Dollar Cost Crypto's main flagship product that we do every basically 3 months. In the bear market, we group some quarters together, but most of the time, every 3 months, basically every quarter, we prepare everybody for, okay, what's different in crypto now? Like, how has the market shifted? How has things changed? So for people who have already, gotten kind of like a certain type of analysis and skill set in crypto, if you're like intermediate to advanced, which I think a lot of people in the Pulse and Hex communities are, then, it's kind of similar to what you're doing here today, right? Like, we give you guys another angle on the market, another way to look at the market. We're not always right, but a lot of the times we are. And so if you jump into the crypto mindset course for Q1, we're doing the webinars from February 9th to the 23rd. We do 15 live webinars on a variety of subjects. We have various people from the Hex and Pulse Chain community, creators and stuff like that coming in and sharing some of their knowledge as well. And so, if you jump in, we'll have hundreds of people, like-minded people just trying to get after it in crypto and make, gains and balance their portfolios and really figure this thing out. So, and if you're a beginner in the space and you're like, oh shit, like I don't have an angle on the market yet, we talk about on-chain data, fundamental analysis, technical analysis, and where those three things converge for crypto and how you can use that to, make more gains in the market. So, come into the Q1 course and you'll be, very, very happy. If you, and then we basically we have a Telegram chat that we support everybody in that chat for the entire quarter. And you never lose access to the recordings. All the live webinars are recorded, and you always have access to that as well as the chat. So you get to network with people and keep those connections long term throughout the bull market. So if you want to either brush up your skills in one facet there, whether it's risk management, on-chain data, fundamental analysis, or technical analysis, I think everybody can always improve in one of those 3 or 4 areas. And then and then looking for the extra gold nuggets, the extra sauce, right, the extra alpha on a few different angles that we see in the market, then usually it's 1 or 2 of those things that usually not only pays for the entry into the course, but then makes you some good profits on top of it. So that's our goal. And we've had a lot of happy people that have made lots of good money, and I think a lot of people who we've introduced to the Pulse Chain community as well.
Biggest onboarding team, I think, 8,000 plus,
100%.
probably in the even tens of thousands at this point of people who have come into the space because of the work you guys are doing over there. So thank you.
Yeah, we've served over 13 or 14,000 customers. Wow. in total so far, and continuing. So I believe 99% of people who will be in crypto are not yet in crypto. So
Hmm.
it's me and DCC's mission to get out there and spread the good word.
Yep. My only other thoughts with that is, when you come into a group and you're paying for it, you got skin in the game. You're going to learn because you're putting money on the line to learn. So you're going to be more attentive and you're going to take it more seriously. And when it comes to something like this, there's so many angles to look at this market, and it's so diverse. And the most important thing here is that you just start to develop your own process. You take what works for you, listen to the fundamentals, and create that concrete base from what these guys are going to teach you, but also develop a process. Because basically, what you could pick up by watching somebody else analyze the market is what has worked for them. And then sometimes, if you apply those in your own way, you'll find an edge in the market that nobody knows about. And that's
Yeah.
kind of the beauty of doing this for years of time, is you will get mastery over a subset of skills. So,
Yeah, exactly. And that's why we do this also for free, on streams. I know you do it, we do it, so that you guys can come in, understand, this stuff and then not start from absolute zero. So if anything, go get the free information. Obviously, if you're not subscribed to axisALiVE's channel right now, what the fuck you doing? Subscribe, hit the like, right? And then, come over to Cultivate Crypto and Dollar Cost Crypto on YouTube as well. And grab that free information that we've been laying out there for you guys.
thanks, man. Hexagon Hill, do you have anything you want to say before we get out of here?
No, it was a great stream. I enjoyed watching it and appreciate you allowing me to help here. I hope to be on here in the future, maybe one day.
Awesome.
We can count on it. Yeah, Hexagon Hill is an upcoming GOAT.
I like it.
All right, man. All right, guys. Well, thank you so much. And we'll catch you guys on the stream tomorrow night with the Project Pi founders. Tune in to learn more about liquid staking on Pulse Chain. All right. See you guys. Thanks, Charlie. Thanks, Hill.
Likewise. Appreciate it.